Hi, I'm Steve. Welcome to Virobus.
I'm David Rapor.
And David, your company is?
Touchstone Venture Management.
And what do you do?
Well, Touchstone is changing the way early stage companies grow, get funded, and become liquid.
Okay.
Essentially, what we're doing is we have created a systematized mentoring approach to growth.
Okay, and we've talked about that in other episodes,
We
so
have.
we'd encourage people to look at some of those. But today, I've got a question for you.
Oh, yeah, sure.
I'm really good at not knowing what to do, which is the case for a lot of entrepreneurs. Okay, but entrepreneurs, they're looking for money. What are the investors looking for?
Well, it really depends on a couple of different things. One, it depends on the type of investor that you're looking at, and there are multiple different categories of investors. You could even declare that a loan, as an example, is somewhat an investment in your company, and an SBA loan or a traditional bank loan, but I think really your question is more in the line of, I have friends and family type investors, I have angel type investors, which are high net worth individuals who invest in early stage companies, and I have venture capital companies. So really, I guess it depends on really what you're looking for, but really for an early stage company, angel investment is probably the way we ought to focus this part of the conversation.
Why?
Well, friends and family, of course, invest because they care about you, they like what
You
you're doing and
strong-arm
things
them.
like that.
Yeah,
exactly
yeah,
right.
okay.
And venture capital companies are really, depending on what kind of focus they have, but they're almost invariably a little bit later stage than an early stage kind of a startup or an early stage company growth.
Okay.
Angel investing is where most entrepreneurs are going to find themselves. And so these angel investment groups tend to be very locally based, and so they like to invest in local companies that they can help and look after and apply mentoring to, as we've talked about before, and some of the reasons behind that. And then they look for certain things. They look, obviously, for an entrepreneur that's very passionate about what they're doing, very committed to what they're doing. They look for a great deal of intelligence in an entrepreneur, because an entrepreneur has to be able to understand many different aspects of the business, all aspects of the business when they start, because they may be alone or be very few people. So it requires a strong intellect and a strong commitment. Past that, they're looking then at the deal. What kinds of attributes do the deal have? Well, certainly they're looking for a deal that has a great value proposition. There's got to be a strong need in the market for what they're doing. And it has to have a significant market size. And one of the reasons that it has to have a significant market size is because the investor is looking for a return. As a matter of fact, most investor groups look for a return that is 5 to 10 times their money back within a reasonable period of time.
What's a reasonable period of time?
3 years to 5 years,
Okay.
usually. And you could say, gee, wow, 5, 10 times their money back, that's really kind of absurd, it should be. Well, not really. If you look at a portfolio of, let's say, a mythical 10 deals that they might have, well, let's say just one of those 10 would deliver that kind of a return, 5 to 10. Maybe half of them or something like that will deliver much more modest returns. Maybe they'll get their money back, and maybe the balance of those, they completely lose their money. Well, when you take those and average those all out, an angel investment firm or even a venture capital firm might be talking about 20 to 30% average returns.
Okay.
So, and that's about what those get. And that's better than you're going to get in the stock market, and it's a great part of their portfolio, and that's why they do that. But the fact is, if you as an entrepreneur aren't pitching a 10 times your money back opportunity for them, no matter how great it is, they can't do it.
Yeah.
Because it just doesn't fit into the
It's
overall
got to average
model.
out for them.
It's got to average out for them, yes.
Okay, another question about this. 15 years ago, which is not that long ago, it was pretty much a brick and mortar, I'm
Yes.
going to start. But with the internet today,
Yes.
have the rules changed?
Well, they have changed in some respects and not changed in other
Okay.
respects, right? At the end of the day, what you finally have to do is convince a customer to buy a product,
Yeah.
right?
Or service.
Or a service,
Yeah.
correct, a product or service. But at that level, yes, you've got to make that happen. And so you've got to still do all of the things that you normally would expect to do.
Yeah.
You have to be able to explain your product. You have to be able to display them very well. You have to be able to answer the customer's question from a customer service standpoint. You have to effectively promote the transaction and complete it in a very elegant and easy way. But one thing that it has done is it has opened the floor for lots of entrepreneurs who couldn't afford to have a large brick and mortar operation.
Yeah.
And because you tend with an internet or virtual oriented business to be able to get in at a lower price point than you would in a large brick and mortar environment.
Yeah, your ability to cover your startup costs are much better.
Absolutely, that's right. And your commitment, if you went in and rented a building or something like that, your landlord's going to want, a 5-year commitment or something like this for that.
They want to sign a lease.
Absolutely, they do. And certainly, there are still commitments that you make when you're dealing with a virtual business. There's significant commitments that you make, but your entry point tends to be less. But you know what? You still have to take care of that customer or you're not going to be successful.
Ultimately, you still have to please somebody.
Absolutely, that's right. You still have to promote. You still have to have a quality product. You got to get customers. Maybe they're not coming in your door, they're coming on your website. So those equations, although the tactics of how you do that and the strategies for how you do that can be a little bit different than what you do in a brick and mortar environment, they're still there and they're still important.
Yeah, the end game is still serve customers.
Absolutely.
Absolutely. Hey, thanks for that. And we'll see you again next time on Virobus.